Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, we're going to be going over KURV's Group 4 pairs of KQQQ and NFLP. Right, we're going to be talking about the distributions, total return, price since inception, and all-time high. So let's get this show on the road. The point of this video is to provide the investor, which is you guys, value, and that value is giving good, simple, easy to read data. So the first thing I usually like to show on my channel is my portfolio. Because sure, I am teaching some of these fundamentals, but at the same time, I'm also an investor myself. Currently, my account is at $118,707.49. Let's now move over to the spreadsheets. Let's get started with NFLP. So NFLP was incepted in November of 2023. So there has been about 17 distribution payments since this fund has been incepted. And the inception price for NFLP was about $25. And the all-time high price is that $37.14. If you look at the most recent week's distribution or the last month of NFLP, it's going to pay out about 65 cents a share, which is a little bit lower than the last about 4 or 5 payments. That's in line with how the market has been trending. So therefore, share price went down a little bit from that all-time high about in February of $37.14 to that $35.80. But now let's talk about a column that I added to this spreadsheet is return of capital. So I'm deciding to add another data point to the spreadsheet. I don't want to put too much data, but I definitely think that return of capital is a huge conversation, especially making the determination, hey, does this fund need to be in a tax advantage account so that you don't get effed over when it comes tax time? Or is the return of capital high enough where you don't have to worry about it? And then once you cost basis turns to zero, then you have to start worrying about, how much you're paying for income at the long-term or short-term capital gains levels. So in March, their number for return of capital has not come out, but I have annotated every single return of capital marker from KURV's 19A1 forms. And if we look at the total ROC since inception, it's about 84%. If we look at NFLP's total premium since it's incepted, it's about $10.04 per share, where you talk about the number of distributions. But if we look at the average distribution amount per payment, it's usually about 59 cents a share. And let's start looking at just the overall return of this fund and if it's even a good investment. So since the inception price, this fund has increased about 43.2%. So that's a really good return on investment in addition to receiving a premium. Now let's do total return. So we're going to take that share price and we're also going to add in the total premium. And so now we're looking at a total return for NFLP of 83.38%, which is really high. That's really good. You almost at 100% in about, a year and quarter of investing into this fund. But that's if you invested at the inception price. Not many investors have actually done this. So I like to also throw in an all-time high number, right? And the peak for NFLP was $37.14 a share. So I'm going to use that same return or total return calculator, but with this $37.14 as a share price if you bought in at the wrong time. So if we look at that with the all-time high number, we were technically negative 3.61%. Which, I mean, if you look at it, that's not necessarily bad compared to all the YieldMax funds. But once we throw in the distribution, the total return looks a lot better. We're at 23.44%. So by far, I think NFLP is a relatively safe investment. Netflix is going to be around for quite some time. There's too many good shows on there for people to drop the subscription. It's an industry that's always needing to reinvent itself. What's the new hotness and whatnot. I think Netflix is a decent player in that regard. So therefore, would I invest in this fund? Yes, it has all the criteria that I'm looking for. However, right now, for my investment strategy, I'm not investing into NFLP. I definitely think there's a streaming war and there's only so much room that these streaming services can grow. Sure, there's going to be more and more people, but at the end of the day, unless they're continuing to make more and more new content, people might drop or take up the subscription. That wraps up NFLP. Now let's go over to KQQQ. All right, team, let's go over to KQQQ. So KQQQ is something that I have been monitoring and am quite interested in. They're basically investing into the top performers for the NASDAQ, but then you also receive a premium because most of the funds in the NASDAQ that are top performers like NVIDIA, it doesn't pay a distribution. So therefore, I think KQQQ is a opportunity where you can capture growth, but then also receive a premium. There's something to say about that. So let's take a look if this is a good investment or not. So for KQQQ, it has been incepted in August of 2024. And since August, it has 8 distribution payments. And the most recent payment in March was 15 cents a share. And that's been very consistent with what KURV is trying to do with KQQQ. The payments for the last 7 payments have been roughly close to 14 to 15 cents a share. The first one in August was about 8 cents, but once the fund managers got their strategy in place, then it's been consistently at 15 cents a share. KQQQ was incepted at that $25 strike price, but then the all-time high went to about $27.72. And as with the NFLP, I have added the return of capital because I think it's a very important calculation when it comes to these high income ETFs and making a determination, does this need to be in a tax advantage account, or could it survive a normal brokerage like Fidelity, Robinhood, E-Trade? And so from what I did is I took every available 19A1 form from KQQQ and made an average of what the return of capital looks like. They did not come up, our KURV did not come up with the 19A1 form tax document. So therefore for the March return of capital, we don't have that number. But from all of the other ones, minus December, because they also didn't have December's, the average return of capital for this fund is about 79%. So basically this means that 79% of the distribution is going to go down to lower your cost basis. And then you still have to pay taxes at normal ordinary income levels for the remaining 21%. When I do some of my retire on videos, I explain the return of capital a bit more in detail. But for this, I just want to do a quick overview of how these funds operate. Okay, so since KQQ has been incepted, we have received a total premium of $1.12 per share. We talked about the number of distributions, and that is at 8. And the average distribution, per payment, per distribution is about 14 cents. If you look at the share price change in value since its inception, so basically we're taking that $25 and dividing it against that current share price of that $24.82. And we are at negative 0.72, so almost down 1%. But if we take the total premium in addition to that share price, we're up $3.78 since its inception. If we take the all-time high number of $27.72, the numbers look a little bit more bleak. The all-time high change in value is negative 10.46%. And then once we incorporate the distributions, we are negative 6.40%. And the average share price is about $25.99 per share. So looking at this fund right now, I would not invest to it. There is a lot of growth potential, but one, I'm not seeing the growth being reflected in these numbers, and the distribution isn't high enough for me to get excited about investing into this fund. If this fund performs better and down the line and it matches the growth of the actual, top players in QQQ, we'll see. I might think about investing into this fund, but as of right now, KQQQ, I am not investing in it as of right now, but that does not mean I won't invest it in the future as long as the numbers start trending in the direction I want them to. Okay, guys, so here are my final thoughts on this video, right? We looked at the group 4 payers for KURV, that's KQQQ and NFLP. NFLP is a fund that is meeting all of the right metrics, right? We're having share price appreciation, the return of capital is pretty high, and the distribution is also pretty high. So therefore, this is something that I can see myself investing in, but currently with how my account is set up, I don't want to invest into it. However, let's take a look at KQQQ. KQQQ, right now, the share price return is a negative number, and the distribution isn't high enough for me to get excited about investing into that fund. Therefore, both these funds, I am not interested in investing in. However, NFLP, there is a case, but I am also not that I'm a fan of Netflix itself, but you have to be very bullish on Netflix. And I think there is a ceiling for Netflix. It's just a streaming platform. It's not reinventing itself. Once it gets into different markets, maybe if they start doing more live events, they start changing up their different business planning, I can see myself investing into NFLP. But if I want to invest into a high income ETF and take advantage of the return of capital, I'm going to have to hold on to this fund for 4 years. Because if you're trying to buy in and out of funds that are return of capital, when you sell out, it's looking like you're making a lot more money than you actually are. So just leaving those 2 cents there. And yeah, guys, that wraps up the video. Hope you enjoyed it. Hope you got some sort of value out of it. Let me know what I could add or take away to these videos. I want to leave the metrics and the numbers that make the most sense to give if we can just look at this, you can make a quick 1-minute analysis and be like, yes, good investment, or no, bad investment. So I want to keep things very simple. But yeah, guys, that's the video. Matt out. See you at the next one.